it's Tash and Michael here with you from Specific Property, and we're chatting as usual all things property.
We are indeed, and we're going to talk in this video a little bit about whether we'll see a return to the boom times of the property industry that they've experienced over the last couple of decades. So I guess I'll kind of put that into a little bit of context, Tash.
Yeah,
so,
for people that don't know what boom times mean.
So there was a period back in the 2000s and the early teens of this decade where property prices, especially in the two major capital cities, that being Sydney and Melbourne, had some really strong consistent growth where we saw prices go up 5 or 10 or 15% in some years, and followed on from that with years of other growth that was maybe not as high but certainly consistent. So we saw some really strong growth, and I would call that almost like a mini boom, I guess, in a way. The question that I want to put to you, and I guess to the audience, is whether we're going to get back to that. And I guess my initial response to that is, to summarise it, is to say no, and there are a few reasons why that's the case, in my opinion, and obviously we only talk in opinions. But one of the reasons for that is that, when we had those previous really large growth periods, we had some reasonable wage growth, we had credit conditions that were fairly reasonable, so you could actually go to the bank and borrow money and be able to service that quite easily. What we've seen now is some of the fundamentals that were still present back then. So we've got population growth, which is really strong. We've got very, very low interest rates, as we know, with the Reserve Bank cutting interest rates just on Tuesday. So that's obviously given people a large or some advantages in terms of being able to fund it. But the main difference that we see now in comparison to what we were seeing back then is the access to credit and the way that the banks are calculating serviceability. So what I would say is that, whilst I think that we're going to see some, we've seen the market come back over the last 12 or 18 months in both Sydney and Melbourne, and to smaller extents in other cities. I think what we're seeing now is some conditions and confidence start to return to the market, and we'll see some stable growth and some solid growth, but it won't be in that that 10% per annum kind of range, I don't believe. I think we're going to see 2s, 3s, 4s, 5s. So still solid growth.
When you were saying as well, based on just the lending criteria, I remember, so this is going back to when my brother bought his first house, so it would have been 2008, I'm pretty sure, and the lending criteria was extremely different. So we've had this conversation before, and he said, now that you're 26, 27, buying a house now is so much more difficult. Back then, he goes, we had $10,000 between us now in life, between the two of us, we had $10,000 in savings, and they bought a small house and grew their property value. But he said it was super easy for them to sort of get a loan for $200 and something thousand because the lending criteria was completely different, and they were in that gap of just being able to sort of take advantage of that boom. So it's interesting that you say, yes, we may see boom, but not of that same extent, based on the lending criteria have extremely changed.
Yeah, I think the magnitude won't be the same. What's really underpinning, or what will underpin the growth, is that during this contraction that we've just had recently, we've still got a huge increase in population happening through migration and our natural birth rates versus death rates. But in addition to that, we've also had a number of developers across house and land and townhouses and apartments actually postpone or pull new projects from the market. So we're almost in this stage where we're going to have an undersupply of property again. I know people talk about oversupplies of property, and yes, that's at a point in time, and we've certainly gone through that. But I personally foresee a situation, especially in the three main cities in the East Coast, a situation where we're going to have an undersupply of property again. That type of property that's being delivered might not be to everybody's cup of tea, but it doesn't really matter in a way if you don't have enough properties to actually accommodate the people that are going to be living there. That drives prices up. The key is the selection of the property and what makes a good property from a bad property, and that's where we come in.
Yeah, that's where we can help out. So if you do have any questions about what makes a good property, you can always get in touch with us via email or phone call. Again, specific property, Tash and Michael, and we're on Facebook, LinkedIn and Instagram. You can find us, and we'll be chatting to you soon.
Thanks very much.
Thanks, bye.